Hi, thanks for tuning in. Over the weekend, I had a little bit of a chat about the gold chart and whether it was showing relative strength or weakness now. This is the gold chart. It's the weekly chart, and the previous lows of the range came through here. And the first point of significance for me was this 3-bar reversal. And it was complete in the 3 bars. You can see the highs were through there, and this bar did come up to the highs. In response to that, always watch for the response. There was a test for supply, that's intra-week, and an acceleration higher. That confirms the 3-bar reversal or shakeout. Price then went into a consolidation pattern, and it even pulled back and tested the highs of this reversal, and then price accelerated higher with some real intent. It moved towards all-time highs, and it looked like the breakout was on. And then this bar turned up the very next week. A bar like that, ignoring volume to begin with, a bar like that would suggest a high is in, and that a very poor outcome might arrive from that. That might suggest that a high is in and the market is going to move lower significantly over time, but lower overall. And that's what this discussion's been mostly about. This was strength in the background, no doubt, but has this superseded that strength in the background, and now there's relative weakness in the background, or not? My first point on this bar here is that it respected this important level. It didn't break below it, it only came down to it. The second point that's interesting is that volume was reduced over the previous bar. There's a strong relationship between spread and volume, and spread increased significantly on this bar compared to this bar, say, but volume was reduced. That doesn't really make sense. That's not quite right. That suggests that either this bar had lower volume than its spread represents, or this bar had higher volume and there was a lot more selling pressure in there than it appears. Now that seems unlikely because price moved up initially on this bar, on this down bar. If that was full of supply, that probably wouldn't have moved higher, certainly not that much higher. It would have come straight down like that. But it didn't. It went up first. It went up significantly, and then it slammed lower, but it did respect this level, and volume was reduced. That suggests that the majority were all on one side of the trade, and that's happening quite a bit lately. You see, it can happen on up bars or down bars. You see the majority of the market all on one side of the trade, and the trading becomes exaggerated for at least a period of time. It may not last very long, but the market builds these exaggerated bars. Sometimes they even break through a support level. This one didn't. You see the majority of the market all on one side of the trade, and that gives an exaggerated bar, which looks better or worse than what it really is, depending on whether it was an up bar or a down bar. And in this case, for instance, if everyone's selling, or the major majority are selling, the bar then has to stretch lower in order to find sufficient buyers to satisfy the sellers in the market. And that means the market may have to stretch far lower than it would have had to do otherwise in a more balanced market. So the interesting thing initially was that volume was lower and the bar did respect this important price level. It didn't break down, it didn't break through it, it didn't even test it, which was unusual. Normally you'd see something as significant as that break through, or at least threaten to break through. There's actually a little gap off the low here. Let's just clear this up a little bit. We'll put back in the reversal. Here's the important level we were looking at. This is the nasty bar. Now you can see that the next bar did test below that initial bar's low, but it rejected going lower and it pushed higher to close as an up bar, albeit slightly off its high. And volume was reduced, so selling pressure was reduced as price moved lower, and then some buying came back in. Perhaps you're seeing the market balance more there, and there's more of an equilibrium being formed. That's showing that this market did overshoot to the downside, especially considering volume was reduced over the previous bar. And the next bar was also up. So you've had two up bars in response. If this bar was as serious as it appears, then there should have been a down bar in response within 2 to 3 bars. You see over here, immediately following this reversal, you had a little test for supply, intra-week there, and then an acceleration higher. Immediately it was confirmed as strength in the background. This should have been confirmed as weakness in the background, but there was no real downside follow-through. There was a little push lower below the important level, and then the market reversed and moved higher for 2 bars, or for 3 bars actually. That's not what you see when severe weakness appears to have arrived. This bar and this bar was the Christmas and New Year's break, which was affected obviously by holidays, and that's these 2 volumes. So they can be discounted to some effect. Although volume on the New Year's week wasn't too bad. You can put a line through like that there and show where the market found support and then was an up bar next week and rejected going lower here. But in response to this bar, always watch for the response. It'll tell you what's probably happened previously and then in turn what may happen in the future. Then we had like a little shakeout bar. And if you note, this bar here did have very high volume. This is the first week back of full trading after the Christmas New Year break. And that was pretty serious volume actually. And then you've had an elongated test for supply come little mini shakeout, however you want to look at that. It did test below the previous bar's low. It closed off its low at mid-bar, but on reduced volume, so selling pressure wasn't too bad. And then this bar, increased volume, very narrow spread, next bar up, buying support came out on this bar for sure. Now what we're seeing here, a shakeout, another little mini shakeout, buying supports come in. That's not what you expect to see in response to a severe down bar that may now cause the market to start moving lower in response. 3 up bars and then some support bars, some buying bars down here. That's not what you would see. For me, this bar is discounted quite strongly. There should have been downside follow through in response almost immediately. And if there wasn't downside follow through in response almost immediately, there should have been threatening down bars to keep the story alive, to say this is weak, it's just not weak quite yet. So you'd see little mini up thrusts and weak up bars and down bars that keep on coming back to the lows of the range. But that hasn't happened. You've seen 2 buying bars. These 2 bars can be discounted because it was Christmas and New Year, and then support came in on this up bar on really high volume. And then there was a shakeout that tested below the lows of the previous bar and closed mid-bar. And then strong buying support appears to have come in there on that little narrow spread down bar. If that was all supply, that would have had a really wide spread towards the downside like this. But it didn't. Spread remained really narrow. And that suggests that buying support came in, and it was the buying in the market that kept that spread narrow despite the selling in the market. The selling was being absorbed really comfortably by the buyers, and that was confirmed by the next bar being up. If there was all supply in this bar, this little narrow spread down bar, and price did move lower, or even if it didn't, the next bar wouldn't have been up. It would have been down or at least sideways. This bar did close poorly, and that's okay. It's still an up bar on quite high volume here. And I'll just clear this up again because it's getting really messy. Here's the important level we're looking at through here. Here's the narrow spread down bar that looks like buying supports come in on an increase in volume. Here's the up bar. Now we had a line through there, which is possibly an important line. It's only a minor level, but it explains that supply was drawn out from the left from here, and that's what's caused this bar to close off its high and back to the level of safety where supports come in down below that line. Then you've had a test for supply and response, and supply was found to be low. Because we can see that down here at this level, this is where all the buying's taking place. Then you've had a shakeout below all these previous bars lows, and a little bit more volume has been drawn out, but it's still below average. It's almost at the average, but if you're testing below all these bars low, where you would expect there to be a lot of stops being placed through here, not very much volume's been drawn out at all. And now price last week has pushed up to this level here. Now this bar here should have absorbed some of the supply from the left from this period here. So through here should have reduced supply compared to what there was previously. That will allow this market to edge higher with relative ease when trading conditions are considered favourable. Now, whether that's this week coming up or not, I don't know. If they're not this week, you might see a test for supply. You may see a test for supply anyway, at least early, intra-week, because that's what these markets do. But testing for supply also allows the market to mark time and wait for the right time, wait for favourable trading conditions. I'll suggest that right at this point in time, there's reduced supply to the left within the range of this bar at least. It's been absorbed from this level. That will allow this market to move higher in response with relative ease, perhaps up to this level, when the trading conditions are right and the market's ready to move. That'll probably depend a little bit on the US dollar as well. When there's a little bit of weakness in the US dollar, it'll allow this market to move higher. When there's strength in the US dollar, you see this market attempting to absorb the strength in the US dollar. It doesn't want to go lower in response. It's going sideways. It's relatively strong. So that's how I see the market. I'm discounting the weakness in this bar. I think it's been exaggerated by the majority of people being on one side of the market. I note that it's respected this level, which you often wouldn't see in a bar that's really weak, especially the response to it. Always watch for the response. Always watch for the response. It had lower volume than the spread suggests. The relationship between spread and volume wasn't respected, and that causes me to discount that bar somewhat as well. And then, as I've said, watch for the response. The response will give you the answers generally. It won't tell you exactly what happened. You'll probably never find out exactly what happened on this bar and why. You can speculate, but that's about as far as it goes. What you can do is watch for the response. There's been 11 weeks since that bar arrived, and there's been no serious downside follow-through in response. There's been no threatening down bars. All these bars here that are coming down towards this low here are all showing you relative strength. All these bars here are showing you relative strength. There's only been a little bit of inferred weakness in this one, and it can be explained by supply coming from the left, and it closed right at the important level. And this bar is a response to the strength being shown here, where it's pushed up to this important level, and it looks like it may even go higher, perhaps depending on what market conditions are next week. So I discount the inferred weakness in this bar, and I'll consider that the market is still showing strength in the background from this reversal. Okay, hopefully that made sense. I'll change that opinion if there is any serious downside follow through that still arrives. But at this point in time, for me, there's only really been strength shown and very little weakness. The only other weakness that's been shown was on this bar, which is extremely low volume, and it was for the shortened Christmas week of trading. And this bar, which shows you that supply was being drawn out from the left. So I can only really see strength in response to this bar, and that doesn't suggest that this bar is particularly dangerous, at least not at this point in time. Okay, thanks for your time. See ya.